Thank you very much, Charles. Good evening, ladies and gentlemen. You're certainly a bigger audience than I had at Edinburgh University. We had 22 students gathered to discuss the referendum, so there's more of you here, and I hope you're at least as engaged as them. I've just realised I'm the second of 3 lawyers speaking to you this evening. I'm sure the last time you had 3 lawyers speaking to you, you were either in serious trouble or it cost you a great deal of money, or possibly both. So hopefully you'll get off lightly this evening. First of all, thank you for having me. I think it's tremendous that you're having this debate. Whichever side of the divide you're on, or indeed if you're still undecided, the question we're being asked in September the 18th to decide on will be the most important political question I suspect anybody in this room will ever be asked to decide in their lifetimes. And it's absolutely essential that we enter the voting room in as full knowledge as we can have about the consequences of our vote. So I think it's great you've organised this event, and I'm delighted to be here as one of very many similar events that I'm doing. And I'm here representing the Better Together campaign to keep Scotland in the United Kingdom. And the question in this referendum isn't whether Scotland could be an independent country, it's whether Scotland should be an independent country. And that's what we need to decide. Would leaving the UK be better or worse for Scotland? Would it be better or worse for us and for the generations that follow us? Because it's not just a question for us, it's a question for everybody who comes after us. Because if we vote to leave, I suspect they won't want us back, even if we did want to go back. And I passionately believe that the best future for us is to remain a strong and proud nation, whilst benefiting from the security and opportunity we have as part of a bigger United Kingdom. We've got an economic recovery at last. Things are starting to improve. I don't think we should be putting that at risk. I think we can bring out the best of Scotland by working together with the rest of the United Kingdom. We've achieved so much together over the centuries, and I think working together in the future we can achieve a lot more. Staying a strong part of the UK is in our best interest. Our companies have more customers, our young people have more opportunities, and we face less risk in an uncertain world. We have the pound as our currency. We don't have our interest rates set in a foreign country like in the Eurozone. And while other small nations were overwhelmed by the global financial crisis, we were protected by the strength and numbers of the United Kingdom. Being part of the UK is good for jobs in Scotland. Scottish companies sell twice as much to the rest of the UK as we do to the entire rest of the world combined. And as part of the UK, Scotland, with a population of 5 million people, has a home market of in excess of 60 million people. There are 200,000 Scottish jobs depending on companies which sell pensions and mortgages, and 9 out of 10 of their customers are elsewhere in the UK. And staying in the UK makes financial sense for Scotland. We have public spending that is £1,200 a year on average higher than the rest of the UK. Within the UK, in terms of the balance of payments, our position in terms of the contribution we make through North Sea oil is equivalent to the UK as a whole. There's no great pot of gold if we vote for independence. All the North Sea oil money is spent just trying to fill in the income side of the balance sheet, and we still have a £7.5 billion deficit currently, despite that. So it's been a few hard years since the global economic crisis. Things are already tough for many people. They're starting to get better, but we don't need the more cost and upheaval that will come with independence. And if we do vote on September the 18th to leave the UK, we've got just over 500 days to set up a separate state. And that leaves too many questions unanswered. What's our currency going to be? How would our mortgage rates be set by a foreign country? How would benefits and pensions be paid? How much would our national debt be, and how would we pay it off? And whether there's detail on how independence would work, what it would cost us, and where the money's going to come from, voting to leave the UK would be a huge leap into the unknown. The best decision for Scotland is to vote for a better future working together and to say no to the risk and uncertainty of separation. Now, I want to touch very briefly on what I think are 4 key aspects of the debate that will be of interest to you this evening. First is the question of trade, second currency, third EU membership, and the fourth is the future of financial services. Firstly, on this question of trade, there's a phenomenon understood by economists called the border effect. And the border effect, and this was recognised by Mark Carney, the Governor of the Bank of England, when he came to Edinburgh just over 2 weeks ago. The border effect demonstrates that where you create a border between 2 countries, the level of trade between them diminishes. This was most obviously seen when the former Czechoslovakia divided into two countries, and there was a dramatic fall-off in the level of cross-border trade. Something similar was seen when Ireland voted to leave the United Kingdom in the last century. Nobody's quite sure why this happens. It may simply be psychological. It may simply be that people want to buy goods and services from within their home market, but it does happen, and it's something we need to understand is a risk if we vote for independence. Interestingly, in financial services, we have a EU single market in financial services. Anybody in Britain can buy financial products anywhere in the EU. Just over 1% of British customers buy financial products out with Britain. People don't like buying services out with their home market in financial services, and that's something you need to be aware of. The second issue is that currency, which Christine touched on. Mark Carney, in his speech a couple of weeks ago, poured cold water on the idea of a currency union. Why? Because it would be a very unbalanced union. Scotland would have 10% of the GDP, and the rest of the UK would have 90%. And it would be clear who would call the shots in that arrangement. It'd also be clear who would bear the risk. It'd be the rest of the UK bearing the risk of bailing out Scotland in the event of a crisis, and not vice versa. And Mark Carney made it also clear you would have to have a banking union. The rest of the UK would have to be willing to underwrite Scottish financial institutions. Would people in England, Wales and Northern Ireland want to bear the risk of bailing out Scottish banks like RBS? And how much would Scottish banks have to pay for this guarantee? And it really wasn't surprising that just last week, George Osborne, backed up by Ed Balls and Danny Alexander, said a currency union would not be in the interests of the rest of the UK. Because while there would be advantages to it, these are outweighed by the disadvantages, by the risk that would be borne by the citizens of the rest of the United Kingdom in the event of separation and in the event there was an attempt to create a currency union. And remember, the white paper says that if there were a currency union, Scotland could vote to leave at any time. That's not a stable arrangement. It's not an enticing prospect for the rest of the UK to enter into this arrangement. It means giving up sovereignty, ceding sovereignty, as Mark Carney said, when Scotland could vote at any time to walk away and leave them in limbo. So it doesn't make sense. And it's very interesting that there was a poll at the weekend done by YouGov of people in England and Wales, 58% of whom said they would not support a currency union post-independence, and only 23% would. So the politicians are in tune with the public mood. And of course, it wasn't just the politicians saying this. Sir Nicholas Macpherson, who's the Permanent Secretary of the Treasury, produced advice, which unusually was published, to say he could not recommend, regardless of who was in power, that the rest of the UK enter a currency union. Of course, the logic to an independent Scotland is to have its own currency. It's as Jim Sillars, as Patrick Harvey in the Yes campaign, as Colin Fox in the Yes campaign, as Dennis Canavan in the Yes campaign have said, we should have our own currency if we're independent. That way we have full control over the economic levers. Of course, the SNP don't propose that because they think it's going to frighten the horses. People don't want to have a separate currency, but that is the logic of the position. And of course, if the rest of the UK says no to a currency union, Scotland can't force them to enter into it. What is the alternative? Is it going to be sterlingisation, like Panama? Well, we could do that. We've then got no central bank, no lender of last resort, nobody standing behind our financial institutions. Or is it joining the euro? Well, as Christine said, we can't do that straight away. We have to have our own currency for 3 years. Or is it simply a new Scottish currency, and then you're back to the issue of transaction costs? Thirdly, EU membership. I agree with a lot of what Christine had to say. I don't think there's much doubt that the EU would welcome Scotland as a member. The question isn't whether we would be in the EU. The question is on what terms. The UK has got a very favourable arrangement with the EU. We've got opt-outs on a whole range of issues, Schengen, Euro membership. We've got a budget rebate that was fought for by Maggie Thatcher with her handbag many years ago, that the UK still enjoys. We can't assume that the rest of the EU would be happy for Scotland to continue to be in the EU in exactly these favourable, on these favourable terms. And what Barroso has made clear, and this is now well understood, is there will be no automatic right of entry to the EU for Scotland. It is up to the other 28 member states to agree. All of them would have to agree, all of them would have to agree the detailed terms, and that decision would require to be ratified by the national parliaments of each of the other 28 member states. And it's very unlikely that those who've been new entrants to the EU over the past 10 years would want to see a new independent Scotland getting a more favourable deal than they've had themselves. So that is fraught with uncertainty. And lastly, I want to talk a little bit about financial services. It's hugely important to Scotland as an industry. And of course, 90% of the customers of financial services sector are based elsewhere in the UK. So even companies based in Scotland have their customer base elsewhere. And there's a real risk that if we become an independent country, we put an international border in the middle of these transactions. And crucially, if we are in the EU rules are quite clear. We need to have our own separate financial regulator. Financial services are designed around a tax and regulatory system, and any divergence in this area would produce a significant border effect. And there's very real concern amongst the financial services industry as to what this might mean. A separate regulation system in Scotland that inevitably is going to diverge over time. That means having to run two parallel regulatory systems, perhaps two parallel complaint systems. Are customers elsewhere in the UK going to be happy buying products from companies based in Scotland with a different regulatory system? We don't know the answer to that, but it's certainly going to add transaction costs and administrative costs to any businesses in the sector. And there's a particular problem with pensions, because many of the private pension schemes we pay into are based within England, Wales and Northern Ireland. And if we go it alone, EU rules mean that we have to fully fund these schemes immediately, rather than through a staged recovery plan, which is a very substantial financial challenge for these. Now, that would mean another derogation from Europe. So in addition to going through the process of applying for EU membership, we have to ask for something additional, another derogation on this particular aspect. And nobody so far has been able to get such a deal. Indeed, the Czechs were just fined recently for breaking the rules on this very issue. So just to sum up, there are risks attached to independence. There's the risk of the impact on trade with the border effect. There's the uncertainty around currency and what it means if we have a different currency. There's the risks of the EU, whether we'll be in and if so on what terms, and the question of separate financial regulation. And the question is really, is it worth it? Now, the nationalists say, and Mr. Ewing I'm sure will say this, fine chap as he is, will no doubt say this, it'll all be fine. Just trust us. Everything will work out. We are saying it'll all be fine. Just trust us. And I would simply ask is, if you were investing in a business or advising clients to invest in a business, would you do it on that basis? If somebody was making promises to you, it'll all just work out without any evidence, would you invest on that business? Would you even buy a used car on that business? If somebody said it would be fine, would you buy a used car from this man? That is the question tonight. I think we've got the best of the both worlds. We've got a devolved Scottish Parliament within the United Kingdom. Devolution is developing. It's not the end of the story. There's more devolution coming down the track. But we retain a single UK market. We retain the pound as our currency. That's not in doubt. And we retain political influence within the United Kingdom. Scottish businesses and financial services benefit from being part of a bigger, stronger UK economy. I think we're better together, and I think we should stay that way. Thank you very much.